Do you know the exceptions to Section 40AI of the Income Tax Act? This section, at its core, disallows certain expenses if tax has not been deducted at source, or if the deducted tax has not been deposited. However, there are certain exceptions to this rule, and knowing these can save you from unnecessary headaches. Firstly, consider the threshold limit. If the sum paid to the resident falls below this limit, as specified under the Income Tax Act, then no tax deducted at source or TDS is required. Consequently, Section 40AI does not come into play in this scenario. So in essence, small payments are safe from this rule. Next, let's look at the purpose of the payment. If the sum paid is for personal use and not for any business purpose, then Section 40AI will not apply. This means that personal payments are exempted from this rule. Here, the keyword is personal. Thirdly, if the sum paid is not chargeable to tax, then Section 40I will not apply. This is the case when you can prove that the sum paid by you does not fall under taxable income. This may apply to specific categories of payments which are not taxable by nature. Lastly, if you have deducted the TDS but failed to deposit it to the government's account, Section 40AI does not apply. Instead, you fall under Section 40AIA. Here, the issue lies not with deduction, but with depositing the deducted tax. To summarize, Section 40AI of the Income Tax Act is not an all-encompassing rule. It has its exceptions, and these exceptions are tied to the amount of payment, the purpose of the payment, whether the payment is chargeable to tax, and whether the deducted tax has been deposited. Understanding these exceptions can help you navigate the complex world of income tax and ensure that you do not lose out on legitimate deductions. After all, knowledge is power, and in this case, it might just save you some money too.